Hey, good morning, everyone. Welcome to the Macro Snapshot. We are Thursday, January the 8th, 2026. Let's just have a look. I want to look at a few specific sectors because there wasn't a huge amount of geopolitical news overnight or, massive market movements. But what there was some interesting comments coming out of Trump, just in terms of the defense sector and also the housing and home construction sector. And what he basically said is for defense, let's start off with defense, just tweeted out as is his wont the idea that the US sort of military budget should be sort of increased by about 50%. We're talking from $1 trillion. The numbers being thrown around by Trump was plus $500 billion. Now, of course, all of this needs to be sort of accepted by a Congress and agreed to. So, it's very much a question mark. But nonetheless, this is a huge, apart from the geopolitical aspects, a lot of what's going on, the stuff in Venezuela, threats to Iran, Greenland, etc., etc. Definitely, we seem to be in a new sort of a global sort of era, but we won't talk about that today. So just looking about aerospace, it's going to be interesting today to look at some of these aerospace names. You see in the pre-market that one of the ETFs, which covers a broad spectrum of aerospace and defense, is ITA. And you can see in the pre-market that that's up a little bit. So that's going to be an interesting one to be looking out for. Also, want to be looking out for some of these other bigger names. For example, there's the XAR. That seems to be up in the pre-market as a little bit as well. If we look at, PPA, so keep an eye out on some of these. And then some of the individual names, you can look at, something like Northrop Grumman. It's interesting that yesterday was down, but you see in the pre-market, look at that. So that you see the effect here of Trump's comments down at 577 up to 626. Then, of course, you look at Raytheon, RTX, you look at Lockheed Martin, all of these, you see these huge jumps, General Dynamics, all of these in theory are going to be winners from, if the US government is to start sort of ramping up very significantly its defense. Also Huntington here. Another thing to be looking at for that is looking at some companies which make drones for military applications. So apart from the ethics of all of this stuff, definitely, things like drone makers and, these sort of military industrial complex names, aerospace names, all of these here are going to be interesting. Now whether that follows through, that's another question. The second thing which Trump sort of talked about yesterday, again through tweets, again just this whole issue of affordability, saying that he was going to sort of get Congress to ban, or he would ban unilaterally, sort of institutions from buying more sort of single owner, single family kind of home housing units. And essentially what we know is that companies like Blackstone and whatnot, they, a lot of private equity are buying up, sort of a lot of sort of, especially new homes, and then immediately putting them onto the rental market, as a kind of a dividend grab. And Trump said that they're going to try and sort of prevent that, or at least sort of attenuate that. So this is not great news for the either the companies directly involved. Let's look at something like, for example, Blackstone. You see the stock was down. Blackstone, yeah. So you can see the stock was down. Blackstone here. So is it on this news here? Let's see if it recovers a little bit. But they're a major player in that sort of housing market. Then if we look at the ETF ITB, which is the home construction ETF, I'm thinking that's going to be down quite negatively as well. So let's look at that. And then of course some of the homeowners themselves. You've got DR Horton, DHI down. You see Lennar down as well. So not great news. So it's going to be interesting today, as I say, to be looking to see whether the defense outperforms, or maybe home construction sort of underperforms. If you feel like doing a spread trade, long ITA, short ITB could be an interesting one to look at. So that's interesting stuff just on the stock names here. Other interesting things to be looking at. We have let me just go into it. I'm going to go into metals here. So the Bloomberg Commodity Index, which is followed by a lot of money globally. I think I remember, $100 billion of funds. That needs to rebalance at the beginning of every year. And essentially what it does is to look at the performance of the various subcomponents in that index, all of them the commodities, and then it sort of rebalances them in terms of volume, but especially price. Now, we obviously know that something like gold was up about 62% last year, and we have silver up about 139% in 2025, and oil was actually down. So essentially the logic here, and I've read a lot of research, you probably have as well, essentially saying that over the next 5 to 8 sort of trading days or working days, that this has to be rebalanced in terms of the fund, sort of what has outperformed and the price has outperformed. That needs to be sold down a little bit, and what has underperformed needs to be bought in a little bit more volume. So all that to say that incrementally over the next sort of five trading days, there should, in theory, be some sort of mechanical selling of gold and silver and some mechanical buying of, for example, WTI oil. Now, obviously, this is done algorithmically in a very sophisticated way, so it's not going to be a massive amount, of market disruption. But at the margin, we're going to see if gold comes under a little bit of pressure. And you see that last couple of days, it's starting to come off a little bit. We can also see that silver has come off a little bit. We'll talk about that in a second. And we'll look at oil. So that's just an interesting one as well. Now, just in terms of the technicals here, if you measure out the measured move, the Fibonacci extension on gold, you can see that there's still, sort of topside targets go up to 47, 48, even up to 5,000 over the medium term here on gold. So there's nothing technically stopping gold from going higher. One could argue it's come a long way, but the fundamentals of potentially, of U.S. sort of debasement and issuing too many bonds, and with an overly dovish Fed in a strong economy. I mean, think about what we just said at the beginning of the video. If the U.S. government is serious about spending another 500 billion, $500 billion on the defense budget, that needs to be funded somewhere. Now, of course, Trump said it's going to be funded out of sort of tariff income, maybe. On the other hand, we can assume that there's probably going to be a bit more bond issuance. So all of that, an overly dovish Fed potentially, not necessarily, but potentially, that could, continue. Lead to a continuation of this sort of idea of the debasement trade. So the point here is that a gold, could go high from a technical level. It's certainly not particularly overstretched in any shape or form. But just on the shorter term here, let's just break it down to a 4-hour chart. And what I want to point out here is just a couple of things. So you can see here that in terms of the bull action, they did sort of pick up this retracement here, and they took it up to the 61% fib retracement here, which was a positive. So that's good. But the problem here is that it's been rejected. So really, at this point, one could say, okay, that's fine. Now, what do the bulls need to do? The bears need to push it down, but the bulls, again, on the much shorter term here, they need to pick it up and make sure it doesn't go below these fib levels. So we've had another little mini retracement over the last, sort of 16 hours or so, whatever it is, a couple of days here. Really what needs to happen here is that this cannot really breach these levels here. 4,400 is probably pretty key. That's the 50% fib retracement on the short term, and then below the 61% fib retracement at about 43.75. So as long as it stays in here and pushes higher, we're good. But at this point, really the bulls need to push it higher. Now, if they can do that, I mean, the very short term, again, a measured move would be something, measuring out just to maybe a retest of the high at about 4,600, 45.80, something like that. You can see here that the Fibonacci extension does go up into those levels. So that's the area I'll be looking at today, is the 44.25, and then just more generally in this fib extension range. Now, as far as it pertains to silver, you can see here that silver, very similar kind of situation here on the 4-hour chart. Again, it couldn't retest the high, and you can see there exactly to the tick on the futures at 82.6, it was rejected. Now, again, just like in gold, what the bulls need to do here, this is not necessarily a massive problem, but you can see that the retracement already is a little bit more, a little deeper than what we've seen in gold, and in fact, testing at the 61% on the short-term fib retracement. But as you can see here, it bounced off that, which is about 74.3 on the future. So really at this point, this is the key line in the sand for silver, in the sense that, if the bulls want to pick it up, this is a good moment to do it and a necessary moment to do it, and push back. And that point, if they can get out to the top, would have a triple top, which, quite often would break. And then again, just looking at the Fibonacci measured move on the short term, you can see here that the measured move is indeed that a retest of the top at around 82.6, and even pushing higher then into 84, 85, 86 zone. But this is the key zone here. And what I would say that if it breaks below this, let's call it $74. That's a nice round number there, $74. If it breaks below there, there could be more continuation to the downside. And then at that point, one would have to and consider that, as sort of a test much down even into the six, or let's say $70 as a first stop, and even into the 60s could definitely be on the cards. So that's something to be looking at. In terms of the metal space, we've also had a bit of weakness in the industrial metals. Again, we saw that copper came to that beautiful sort of very strong level of resistance at 6.1. Again, similar kind of situation here. The what needs to happen here is that the bulls, if we just look at the short-term fibs here, you can see here it kind of went down below the 61.8. It needs to, on the very short term, it needs to push higher. Otherwise, we could see more downside. On the other hand, if we just want to maybe just extend that down a little bit more, you can see here that it was just to the 50%. So at the end of the day, the key numbers here on copper is 5.83. And the other key number here is this zone in about 5.75, 5.75. Those need to hold. Otherwise, we could see a more downside. And again, we know that a lot of the industrial metals have been overextended. If we look at aluminium, we can see that has come off a little bit as well. In the last, on the 4-hour chart here, we can see that nickel has come down quite dramatically. We can see that zinc has come down quite a lot as well. So the industrial metals are coming down a lot. And again, as I was pointing the other day, it was an interesting trade to go a long put spread on the Alcoa. You can see that in the pre-market, Alcoa, a big aluminium producer, of course, is down in the pre-market about 60.74. So that's come off quite a bit over the last few days. So that's something I personally will be monitoring today. In terms of other stuff, let's just put this back to some daily charts here. We do have some data today. In fact, we just had the initial, we had the Challenger job cuts. Now that came in, it's relatively positive news. You can see that previous, in terms of, this is all about the labor market here. You can see that previous that came in at about 70,000 job cuts. That was down to 35,000, but that's actually positive because it means less layoffs. So we're going to get a little bit more news today. Because remember, yesterday we had a bit of a mixed bag, but ultimately, relatively strong, or actually quite strong ISM services in terms of new orders and jobs. That was actually quite strong. On the other hand, we could say that the JOLTS number was a little bit mixed. So it looks as though the labor market is cooling, but it's not collapsing. Maybe that's okay for the Fed. Maybe the Fed's saying, hey, we can deal with a slightly softer labor market because we still have sticky price pressure from inflation. Now we're going to get a bit of an update to that at 8:30 in about 5 or 10 minutes or so, just recording this video here at about 8:20, and get the initial jobless claims. Last time that was about 200,000 here. Forecasts are essentially, 205 to 10,000. That's still indicating a very robust, a strong labor market. So anything around those numbers will keep the Fed happy, and will not at all necessitate any talk of further short-term cuts. We also get the continuing jobless claims. And again, this whole sort of notion that employers are not really firing people, but they're not really actively employing that more people. And that's leading to this idea that, some of the layoff numbers are relatively stable, but the continuing claims numbers are weakening a little bit. So that's going to be an interesting one. The consensus here is for, a number, between about 1.85 million and 1.9 million. Let's have a look at that. Okay, the other thing to keep in mind, actually, I'll talk about in a second. I just want to go back to a couple of charts here. We had, just going back to the equities. So if we look at the equities here, a slightly weaker day yesterday. We see there's the NASDAQ down a little bit. We can see the Russell down. You can see in pre-market, or not pre-market, but in the futures here, sort of everything down a little bit. Let's just keep an eye just on some of this sort of sector rotation. As I say, look at the Mag 7s, definitely showing a little bit of weakness, not able to make new highs here, showing a little bit of weakness against the equal weight. You see the equal weight had been very strong, but again, as you see yesterday, a bit of a rejection. So the market, sort of broadly speaking, sort of taking a bit of a breather. Now, there's no massive technical damage here. I mean, if we want to look at this, just for example, on the equal weight ETF, when we look at, let's say, the moving averages, you can see we're well above the 20, which is above the 50, 100, 200. So there's no sort of technical damage done as such. And maybe the market's taking a little bit of a breather yet. There's been a lot of, volatility caused by some of Trump's headlines. We saw that with defense and home construction. And keep in mind that tomorrow, potentially a pretty big day, we have the Supreme Court of the United States, SCOTUS, the Supreme Court of the United States, potentially giving its first sort of opinions, maybe even judgments and decisions on the legality of Trump's tariffs. So again, there is a possibility here that, and even a sort of a market consensus, that the Supreme Court will say that, some aspects in some shape or form, these tariffs, since Liberation Day, early April, basically illegal, or at least have to be justified through different acts and different sort of statutes. And there could be a question of some of this tariff money needs to be repaid, which could be a tailwind potentially for stocks, but it's going to create a lot of uncertainty. So I recommend I'm going to do a bit more research into that today, some of the potential outcome tomorrow for the Supreme Court judgment ruling opinions, which we're going to be getting tomorrow. So that's definitely going to be an interesting one to be looking out for. Overnight as well, we did have something I'm looking out for in the currency space. We had the Deputy Governor of the Reserve Bank of Australia, a certain Mr. Hauser, came out with relatively sort of hawkish comments. You can see here the US dollar is coming back, but relatively hawkish, essentially saying so the Aussie dollar actually down against the US dollar, a little bit less than some of the other currencies here. But you see that the what is it, Deputy Hauser? Yeah, he said that it's likely seen in this cycle the last rate cut, and it's probably in this cycle the last rate cut, as I said. So it looks as though the Aussie, the RBA is done sort of cutting, and at this point it's either going to be on hold for the next sort of quarter or two or three, and potentially even sort of a hike at some point if inflation remains in that sort of plus 3% band. So that's an interesting one. But just in terms of the overall, we see a little bit of risk on, and the US dollar sort of pushing a little bit higher. Not huge moves, but as I signaled yesterday, one could argue, if one wanted to, that there is a little bit here, some kind of sort of basing formation you see all around here. There could be some kind of basing formation, and then we could say that maybe even sort of the handle, if it's a cup, which would indicate generally some sort of move upwards potentially. So let's keep an eye out for that, just from a sort of a technical perspective here, whether this indeed is some kind of let me just get rid of this, a cup and a cup and oops, sorry, I just want to get rid of that, a cup and sort of handle formation, which would indicate a little bit more upside. But as we see here, we are at the fib sort of resistance level, which is also the 100 and the 50 EMA here. So this is a pretty key sort of test. And of course, tomorrow, as I said, we have the Supreme Court ruling, and probably just as important and more important, we have, of course, the non-farm payrolls, which is going to be one of the first substantial data points to be looking at. Apart from that, I also just want to look at oil. I mentioned earlier the commodities index rebalancing. Now, oil has been a big underperformer in 2000, was a big underperformer in 2025. So it could be that oil, just the way that gold and silver potentially could be getting a little bit of mechanical selling to rebalance some of those commodity indices. It could also be that oil, which had underperformed, as you can see in for a lot of 2025, could actually get some positive flows. Now that this news about sort of Venezuela has, sort of filtering through the news cycle, we see here that oil did bounce off that, basically about the $56 level, which is an important level down here, and has had a little bit of modest upside. Excuse me, I'm going to grab some tea. So I think that's about it today, guys. As I say, let's look at the. Actually, we've got 10 seconds. We'll just go through together and have a quick look and just see the initial jobless claims number, which should be coming out literally about now. Let's see what the number is. Let's see how long it takes. It's 8:30. So we're getting some numbers here. So 208,000 for the initial jobless claims. That's indicative of a strong labor market. That is absolutely not saying anything weak about the labor market here. Continuing claims. Now that's interesting. That's a little bit higher than expected. So you see here 1.914 million. That is higher than previous. By about, what's that, about 60, 70,000 or so. So that's not great. So it looks as though that's sort of confirming this idea that employers are not necessarily firing a lot of people, but it is, excuse me, becoming a little harder to find another job. But having said that, the 4-week moving average, which is important, want to keep an eye on is still indicating a strong labor market. So there shouldn't be too much negative reaction about that. Okay, I'm going to leave it there for today, guys. Have a great day, and we'll be back maybe even early tomorrow or later today with a non-farm payrolls preview. Thanks very much, and take care.